Apple is currently grappling with a sell rating for its stock, primarily attributed to concerns about innovation stagnation and forthcoming revenue growth challenges. Distinct red flags include declining product sales and geopolitical uncertainties tied to US-China relations. Moreover, valuation analysis indicates that Apple's stock may be significantly overvalued, posing the potential for double-digit declines.
Join our YouTube community. Be part of our YouTube journey. Subscribe now. Get exclusive content, stay updated, and join a community of like-minded enthusiasts. Please subscribe for $1,000 early bird draw.
A critical factor exacerbating this situation is Apple's struggle to develop a competitive 5G modem, falling 3 years behind Qualcomm's progress, as evidenced by a recent supply agreement. This has prompted discussions about a necessary shift in Apple's management approach, potentially requiring a visionary leader akin to Satya Nadella to rejuvenate the company's innovation focus. Furthermore, although Apple has reported an 8% YoY growth in its services segment, most of this growth stems from low-margin businesses like Apple TV Plus and Apple Music, causing a dip in the gross margin. Given the limited pricing power of upcoming services, investors should closely monitor this trend of declining margins to gauge the impact on Apple's stock. These insights were discussed in more depth with members of the private investing community, Tech Cash. The investment thesis for Apple has turned negative due to various concerning factors. Despite its status as the world's largest company and strong free cash flow, Apple is facing significant challenges. The latest iPhone event revealed a lack of innovative ideas, and revenue growth is expected to be under pressure in the coming quarters. Additionally, geopolitical tensions and warnings from Beijing add to the uncertainty. Valuation analysis suggests the stock may be overvalued. Notably, Apple's struggles to develop its own 5G modem have put it years behind Qualcomm, raising questions about the company's direction and management's vision. Furthermore, product sales, including iPads and Macs, have seen declines, while the services segment's margins are shrinking. Overall, these factors contribute to a sell rating for Apple stock. In the latest financial report for September 2022, Apple Inc. has shown a substantial increase in cash and short-term investments, totaling $62.5 billion. However, this represents a decline compared to previous years, indicating potential liquidity concerns. Receivables stand at $39.2 billion, while current assets are $122.7 billion, reflecting a robust financial position. Long-term assets include property, plant, and equipment, as well as investments and intangible assets, contributing to a total asset value of $335 billion. On the liability side, current liabilities amount to $125 billion, with long-term debt standing at $98.1 billion. Apple's equity remains strong at $60.3 billion, supporting its financial stability. These financial highlights illustrate Apple's solid cash position and robust current assets, but they also underscore the company's growing long-term debt, which requires careful management in the coming years. Additionally, the decline in cash compared to previous years may raise questions about Apple's future investment strategies and its ability to sustain innovation and growth. Apple's growth performance shows a mixed picture. While its year-over-year revenue growth has experienced a slight decline, its forward-looking revenue growth is expected to be below the sector median. However, Apple has demonstrated positive growth in metrics such as operating cash flow and dividend per share, indicating a balanced but not exceptional growth trajectory. Buying good stocks can be a good investment for several reasons. 1. Potential for capital appreciation. 2. Dividend income. 3. Diversification. 4. Liquidity. 5. Ownership and voting rights. 6. Historical returns. 7. Inflation hedge. 8. Professional management. 9. Tax benefits. 10. Accessibility. It's important to note that while investing in good stocks can offer significant advantages, it also carries risks. Stock prices can be volatile, and there is no guarantee of positive returns. To make informed investment decisions, it's essential to conduct thorough research, consider your financial goals and risk tolerance, and, if necessary, seek advice from financial professionals.